Hi, and welcome to Ocean AI. This is a weekly market outlook for the week starting the 20th of February 2022. Firstly, on the S&P here. Last week we just edged a little bit lower. Finished between the mean and -1 standard deviation, so nothing too exciting. We're still tracking this ABCD to the downside. This one here. That takes us down to 4,000. Down at 4,000 there, we've got the 50% retracement from back here, September low 2020. What else do we have there? We have the 1.4104 extension from this low to this high. There's lots of things down there. We're going to a smaller time frame. So there is a possibility of a move higher first. So this ABCD here, this comes down here up to here. That finishes right on the 89% at 4262. So if this is going to be bullish, you probably see a move down to here and then a rally off there. But I see this here as being corrective. So after an impulsive wave down, get a correction and then another wave down. So this is why I'm still thinking we're heading down towards 4,000. But yeah, just something to watch out for if we get to this 42,600 level. So that's about it with the S&P. We move on to the Dow. Dow is very similar as well. We've had the drop down, the rally back, and now we're looking for the next leg lower. Go back to the daily. Yeah, this ABCD down will take us down to the 32,000 area. And also it's a 1.618 extension of this move here. So that's what we like to see is fib levels lining up together. So we got those ones down there, smaller time frame, much the same as the S&P. We have this ABCD here, which will take us down to just below the 78%, and that's the other place it can turn. So just put a little box in there, and that would give us that Gartley to buy. So there's something to watch for on that one. But on the bigger picture, I think we're heading lower, but got to keep an eye out on these things as well. So there's the bullish option. Now, while we are here, I want to have a look at this cycle posted last week. So this is pretty much mirroring the 87 and 1929 crash. So if we get those up, so up top here we have the 87 crash. I posted the video, the YouTube video from Peter, what's his name, Indices, and he's been following this for years. So you just look at this, and we're sort of tracking it exactly the same. So this first move from the high to the second high is, I'll go back to the daily chart, easy to see. So 87 crash here, we come down to the new moon, then rallied into the high, which is what we've done. Well, we came a bit lower first, we have our new moon here. And this is the well, 37 days is the 38th day is 40 because you've got a weekend in there. So that's that one. We're 1 day off that high. And then the expected low is 56 days, calendar days from the high. So that brings us in around the 1st or 2nd of March, down here. So if we look at it, that's the 87 crash. Obviously these days we've got circuit breakers and things like that to stop the market crashing like it did in these two times when it dropped 30-odd%. The chances of it doing that are very slim, but we just never know. And then you look at 1929, exactly the same, very similar. Had that crash down, rallied, it actually went lower, and I think it went lower again, but just the same cycle. Had that low there and it rallied. So yeah, something to look at as we go through this week and into next week. This is why I think we're probably still heading lower, because that would line up nicely with the ABCD at 32,000. Yeah, so keep an eye on that. We go to the Nasdaq. Nasdaq's the weaker out of all of them. Obviously, we're setting up with ABCD down to 12,330. It's fair distance away, but it's a possibility. What we've got to get through first, though, is this 13,000 level. 13,000, 3,000 being 3 being a fib level, so this is a major level here. Plus, we've also got the 1.618 from here and 1.618 from here as well. So there's a lot of things to stop it here, but also it could just spike down if we're looking at that possible crash low. And then if we go back and check the volume, so the volume over the last week, same thing again. We had that spike low. Spread it out a bit. We had that spike low here, and that was the reversal, like I was saying in the previous video. We had the spike low here as well, and then it rallied. But the rally was on lower volume. That's exactly what we got here. We had that spike low, and then the next 2 days rally were on lower volume. And then it turned in the last 2 days, Thursday, Friday. Obviously, we saw increasing volume. So that sort of, and we finished at the low of the trading range as well on Friday. So that would suggest we're going to head lower and possibly take out these lows, and that would send us on our way to 13,000. So keep an eye on that. If we look at the weekend markets on the Wall Street, the Dow Jones there, we're down 160 points so far. So roughly 16 points or whatever on the S&P. Yeah, so it'll be interesting to see where we open come Monday morning. So now we'll look at the standard deviations. And if we look at standard deviations this week, we get to that 2 standard deviations is that 4,000 level. And so if we are heading here, this would be the place to look for a buy, because if it gets below 2 standard deviations, all the option guys are in trouble and they have to start buying futures and all this sort of thing. But yeah, so this is why I think we could be heading here. Whether it happens this week or next week into that expected low, we don't know. So watch this level as well, the 4,185, because that's likely to, if we break this low, likely to give us a bounce off of that. So that's that one. If we look at the Dow, the Dow is, the 2 standard deviations is down below that 32,000 we're looking at. So same with that, 32,750-ish, somewhere around there. We'll look for a bounce off there if we go into a bit of a sell-off. And same with the other way, if we do complete this pattern and then it rallies, look for a target around 35,400 area to maybe close your long. But we'll keep an eye on that going during the week and see what we can find. Nasdaq. Yeah, Nasdaq, same as the S&P, got a 2 standard deviation down around that 13,000 level we're looking for. So this is where I think we could be heading. Yeah, this is all the things to look at to come up with some sort of idea where we could be going. But obviously this could all change really quickly with war news and things like that seem to be making us run up and down. War on, we sort of drop off, and war off, we rally up again. So lots of volatility. Yeah, plenty of things to look out for. What else we got? We've got the DAX. Have a look at the DAX. Not on the... Have a look at the DAX. Still looking at lower prices in the DAX as well. So we've got this big levels down here, and we've got extensions and things like that. Around the 14.4 area, 14.3, something like that. And that will give us that ABCD down as well. Smaller time frame. Yeah, so we had this nice ABCD down here, got a nice rally off that, gave us a 135. And then if we go in there on Friday, we had this smaller 135, and that gave us a nice drop down here. So that smaller pattern's now completed, but the bigger pattern will obviously, it'll head down here somewhere. So keep an eye on that one. We look at the $786 here. Yeah, we stopped at the 786 on this drop down here. So if we look at the possible ABCD from there, that takes us just a little bit lower. So keep an eye on the DAX. Monday morning might have one more little low and then a rally, and then we can sell into that rally if it's looking weak. Yeah, that's about it with the indices for the US and the DAX as well. So hope this helps. We'll keep you updated and drop a few trades during the week once we see some things coming up. So yeah, hope everyone has a great weekend, and we'll see you tomorrow. Thanks for tuning in. Cheers.